What happens to your portfolio during an economic crisis? Let's break it down. Historically, gold and silver have acted as safe havens. Gold tends to outperform in times of crisis, especially during war or geopolitical instability. During the last 7 periods of crisis since 2007, gold returned almost 21%, while the stock market was down more than 8%. It also holds up during stagflation, that nasty mix of high inflation and slow growth, because it's a real asset that isn't tied to any one country's currency. Silver is similar but more volatile. It's also tied to industrial demand, so it can swing depending on economic output. What about real estate? During inflationary periods, property values can rise, especially if rents go up. But in stagflation, when interest rates are high, real estate can slow down because financing becomes expensive. A slower economy or dropping stock market and impact on the wealth effect would certainly slow demand for real estate. Now let's talk cash and the US dollar. In stagflation, cash may lose purchasing power due to inflation, but the US dollar often holds up relative to other currencies, especially when global uncertainty spikes. However, there is a caveat here. If foreign investors choose to stop buying treasuries or to sell treasuries that could lead to downward pressure on the US dollar, that could change the historic dynamics of a stronger dollar during a flight to quality. Also, trade will also impact the dollar as well, and there is a lot of ambiguity on trade at this time. So how do you prepare a portfolio for hard times? Think diversification. A mix of precious metals, select real estate, and even short-term, bonds or cash for flexibility. Don't chase risk. On the stock portfolio side, maybe high-quality stocks with dividends. Make sure, though, that the company has good liquidity if you're looking to de-risk. If you understand options, covered calls can help you earn a little extra income if you are willing to give up some upside in case things go higher. And what about crypto? It's still unproven in crises, but some see it as digital gold. Others argue it behaves more like a risk asset, so approach with caution. When inflation picked up recently, we didn't really see crypto as a good hedge against inflation. We saw that it moved more closely with risk assets such as stocks. That said, there is a lot of optimism around the benefits of crypto. Finally, take a hard look at your debt. Pay down high-interest debt like credit cards. That's just wealth erosion. But holding low-interest debt, like a mortgage, can actually work in your favor during inflation. It makes a lot of sense to keep mortgage debt when there is inflation, because you are paying back the mortgage with cheaper dollars. This approach is especially attractive if you have a low-interest mortgage from early 2021. In uncertain times, discipline and preparation matter more than predictions. Are you prepared? If you like this content and would like to see more, then please like, subscribe, and comment.